If you haven't been paying off your credit card in full every month, you are not alone. According to the Federal Reserve Bank of New York, US household credit card debt increased by 100 billion between the second quarter of 2021 and the second quarter of 2022. In this guide, we'll explain why is it important to pay your balance in full every month, how your APR rate affects your payments, and several ways to go about lowering your credit card's interest rate. It can be tough to meet the minimum payments on a credit card when you carry a large balance with a high interest rate. If you use a credit card instead of a loan, your borrowing costs can skyrocket. You'll have to pay higher fees to borrow money for longer than a billing cycle in most cases, and it could crush your budget for the short and long term. See, when you are carrying a balance, interest rates can seem less like a transitory issue and more like a budget line item that has to be paid every month. Carrying a balance on a card with a 25 to 30% APR can be expensive, but even a 10% APR can be high. When you open a credit card, the lender sets your interest rate. However, that's not something you can change. The good news is you can lower your APR in a number of ways. You can negotiate a lower interest rate with your credit card company by simply asking for it. There is no harm in asking, even if they say no. You could and should take advantage of a great history of past payments, which will make your bank more likely to consider your request. When you get a lower interest rate, you'll pay less in interest over time. For a limited time, you might be even able to get a credit card with a 0% APR, although most credit card companies will require an excellent credit score. Consider this: the average credit card interest rate hovers above 19% right now. Whenever you are ready to negotiate, try to get an APR that's lower than the national average on your credit card. Your bank may say yes or make you another offer. Either way, you would be able to see what is your current credit power in terms of negotiating with your bank, but more of this later. Maybe the essential question would be, what is a good interest rate? A credit card's APR tells you how much you will pay to borrow money. There are a few things that affect the interest rate you get on a credit card, like your credit score and income. You'll never accrue interest on your account if you pay your balance on time every month. And I mean all of it, not just the minimum payment required. On the other hand, if the balance is not paid in full, you are going to pay interest on the amount left unpaid. Here is one solution: get a competitive credit card. To stay competitive, credit card companies need to pay attention to what other companies do in the field. You should compare the credit interest rates of credit cards similar to yours. Keep track of similar cards that have better APRs and tell your issuer about them. Also, check the offer and make sure it's competitive and applies to your circumstances. For example, if you have bad credit, you shouldn't compare your credit card APR to that of a credit card that required excellent credit. Maybe the most underrated action you could do is to call your card issuer and ask. Now, taking action with no fear could lead to an awesome outcome. At the end of the day, what could you lose, right? Try contacting your credit card issuer directly and ask for a lower interest rate. Make sure you know exactly what your issuer needs so you don't get caught off guard. Make sure you know the terms of your current credit card so you can use that to your advantage when talking about competing lenders. Don't be afraid to ask, it never hurts. To make things spicy, you can also let them know if you found a better deal from another issuer. Tell them you are considering taking your business elsewhere and they might be more willing to negotiate. If you've been paying on time and have a good credit history, they may lower your interest rate just to keep you. Keep in mind that account longevity matters in this business, so the more time you held the account and paid your balances will be crucial. The worst they can say is no. Whenever you negotiate, let them know you've been a good customer for a long time. This tactic may have an impact on their decision. It's really important to be relentless and don't settle for a no. You don't have to settle if the credit card company denies your request or offers a minimal reduction. If you want more information or an explanation, you can always ask. Be persistent if you don't get anywhere on your first call. Try calling back another time and talk to a different rep or speak to a manager and make your case. You should also ask for a different benefit as well. Reps might offer bonus points or other incentives if the company won't lower your interest rate just to keep you as a customer. The best way to get a lower interest rate on your credit card is to make some steps to improve your credit score, whether you are applying for a new card or negotiating a lower APR. Paying your credit card bill early or on time every month is an easy way to boost your credit score. Also, avoid opening too many accounts, which can increase your credit utilization as well as closing accounts. Moves like this can damage and impact your credit score. Getting rid of most of your debt can also improve your credit. I know this is not easy, especially these days when inflation is at a record high. However, that could help a lot your chances of better APR. Generally, keeping your credit utilization rate below 30% is an acceptable practice. That means you shouldn't have more than $3,000 in outstanding credit for every $10,000 in total credit. Depending on your circumstances, you could also apply for a hardship program. You should call customer service and ask about the hardship program if you think you may qualify. Through this program, banks may waive the interest on an account to allow you to catch up with payments. The time frame varies depending on your personal situation. However, these programs are limited to customers with significant hardships such as job loss or medical emergency. Simply not paying the bill for several months does not count as a hardship. Now, what to do if denied? You can save on interest by applying for a balance transfer credit card. Most of them offer a 0% intro APR for 12 to 21 months on transfer balance. Remember that these offers usually have a balance transfer fee, so you won't get that 0% APR for free. If you want to consolidate debt without further damaging your credit, a balance transfer card is a great option. Now, one method works well for avoiding credit card interest. You won't get charged interest if you make only the purchases you can afford and you pay your credit card bill in full every month. Getting rid of interest is the best way to get rid of high rates. You could eliminate any stress about your interest rate by paying off your credit card balance every month. If you use your card a lot, simply set up an automatic payment so you don't have to worry about it. Debt isn't fun, so you'll want the lowest interest rate. If you're drowning in debt, you might not feel confident about getting out. The good news is you can get relief from credit card debt if you learn how to negotiate. With that being said, thank you so much for watching. Don't forget to let me know in the comments if you got any value from this video. It's 2022, subscribe if you like, hit the notification bell if you aren't already, and I will see you soon.